Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, we're setting up for a continuation of some of these trends that we talked about yesterday, especially this move in the broader market up into the 590 to 600 range. We'll be breaking down some of the options data that forecasts what we might look like in the next couple of weeks, as well as what those implications might be for GameStop heading into this week's price action, as well as into June OPEX. So we'll be thinking about that today in just a few minutes. So before we get to that, though, we have to always start with our gratitude, and gratitude goes out today, first and foremost, once again, to Jake Graff, that is AmGoBlue Twitter user, as well as to our monthly contributors, Ken Wedmerland and Not Medical Advice, for sponsoring today's article and video breakdown. Thanks as well to everybody who has contributed to the channel in the past and will contribute going forward, either in the form of donations, if it's buying a cup of coffee, offsetting data expenses, or just leaving a comment or sending in a question. All of this helps continue and further my efforts in terms of publication and research. So thank you very much to everyone who has supported the channel thus far. So some interesting things for today. Kind of I would say not a ton of new information overall that really kind of changes my outlook on the week. So you'll recall yesterday, really kind of the touch points of my takeaways from some of the events that happened last weekend and over the weekend have been as such that SPY is moving into a position to resume its super bullish stance here. I mean, in fact, we even got who is this? Michael? Is it Michael or is it who is this guy? Ed Yardeni of Benzinga. Basically said what I said yesterday. So this guy came out. You can go. He's the president of Yardeni Research. I should come up with a cool name for my thing here. So president of Yardeni Research basically comes out and says that SPY is probably going to 6,500, which I came out and said yesterday. So I think it's definitely happening. That's what that means. But in any case, though, I mean, what's the use to that, right? What's the use to say checking in to these MSM narratives sometimes? So I would say, right, I'm just a guy who looks at this stuff, right? I know maybe some of you new to the channel, not sure what my background is. It's not finance. It's not even economics. Like my background is as a historian. So that's not not my specialization by direct training. But so everything that I have here, everything that I try to understand is self-taught or picked up along the way over the past few years of trying to understand this either by experience or by watching videos, digesting written material, combing through Investopedia, things like this. So whenever I see a prediction come out like that sort of lines up pretty on the nose with something that I kind of figure out just from looking at kind of my chart studies and understanding the relationships that the different moving pieces of the market have to one another, that is generally, I would say that puts some reliability, I would say, in terms of that particular forecast. If I can do that and reach that particular end, not being someone whose specific objective is to mislead the broader investing public, then maybe there is something to consider with respect to that particular forecast. So in any case, one reason that might explain that, not last quarter, but the quarter before, so Q3 filings, Q4 filings. So fiscal year quarter 4 filings showed that institutions had in fact acquired some very substantial GameStop positions prior to. They had started to accumulate GameStop positions prior to this big move that we had. And very interestingly, last quarter and then into this quarter, we see that institutions by and large are not reducing their holdings, right? So large institutional participation, large institutional holdings in GameStop are something that we saw back prior to the 2020-2021 sneeze. So certainly a good sign or an intriguing sign that GameStop may be preparing for a deeper and longer term Bull move is the acquisition of increasingly large portions of the underlying by major institutions. And what we see here, we're going to get some more filings. Most of the filings will come out over the next couple of days. The big guys, right? So, Schwab cut their position a little bit, right? Vanguard increased a little bit. Goldman relative to their total position actually increased it pretty decently. JP Morgan a bit, right? So we still see some accumulation, not crazy large. Invesco, so this is who does a bunch of ETFs. So they're getting this to fill up ETFs. Some of the more intriguing ones are things like National Bank of Canada, right? National Bank of Canada picked up 785,000 shares. That's our biggest filing so far. Nuveen here, LLC, is a little interesting. In February, they filed, so their asset management branch filed a 13F that revealed slightly over 1 million share position. But now there's a reporting of a no change in shares, but a $1.5 million position held by Nuveen LLC. So I'm not sure if that's the same position. Did they have a million, like a 1.2 million share position? They increased that by 300,000 and then they transferred that over to the parent company. I'm not sure exactly what's going on there, but by and large, we did see that back during this down phase, we did see that institutions, by and large, have been accumulating shares. So not to the same extent as they did, following, of course, revealing these at the market offering positions, these post at the market offering positions last year, but still, some profound additions here. We'll have to see. The real key is going to be whether we start to see proprietary trading firms. So like a big one was Renaissance Technologies. Renaissance Technologies going into quarter four increased their position. They took like a 1.8 million share position. Coming out of quarter four, in quarter one of this year, coming out of quarter four, right? So at the end of quarter four, they cut their position by 1 million shares. So they still held a position, but they cut it by 1 million shares. So Renaissance Tech could be an interesting one to keep an eye on. If they start adding, then that may be an indication that we're bound to start moving pretty hard to the upside. But just interesting to keep that in mind, right? And going forward, we'll want to see these numbers continue to go up. That's going to be a big tell in terms of what we could expect as far as, say, letting the reins off of GameStop in the months to come. Largely in terms of our market context, right? So I sketched some of this out for you guys that I mentioned this in yesterday's video. Something like this, right? So this dip, pretty similar to what we saw with COVID. We have definitively moved up back beyond all of our moving averages here. And what did we do out of COVID with the expectation that we were going to get these rate cuts? Actually, we did get these rate cuts. Those rate cuts came in really abruptly during COVID. We just mooned, right? We just bulled a super, like this is SPY giga bull for, I think this went into summer of 2021, and then it sort of kind of cooled off. And then we went into, beginning in January of 2022, we went into bear market phase. So we're kind of looking something like that right now based on the steepness of that decline that we saw here back during the tariff announcement, and really where our price has returned to, right? So we're fully back above these moving averages on our weekly. Could look something like this. So we kind of get back up here. We form this kind of cup. I don't know, maybe we chill. Maybe we kind of get a correction back here after we redo all-time highs, or maybe we kind of flatten out around 600 and then correct down, and then we just kind of dance around here a little bit and then resume once we actually get the rate cuts confirmed, something like that. But in any case, if we look at our options data for the broader market, I mean, especially into the end of this week, we are very stable, very heavily call biased, lots of call gamma, especially all that call gamma that came in on Friday, all those options bets that comes in, long calls on Friday, put closures, the like. We're still looking at some pretty heavy stability going into May OPEX. Now, good to keep an eye on exactly what might happen following May OPEX. Yeah, I guess it's possible we sort of, what looks to be the case is over this week, we'll move into that 590, 600 range. Maybe we even get a test of 600. Maybe we correct a little bit. We sort of recuperate for a couple weeks and then bull back into June OPEX, seeing as how right now that is certainly call biased as well. Yeah, I mean, basically out into these early couple months, we're definitely bullish. Way out into September, we still have a little bit of a put gex kind of bias there, but stuff looks good. Stuff at least looks stable going into today. Then we do see that pre-market here, right? Our price is going back up and over our closing price, right? Yeah, we're in 583. Yeah, looking very pretty there. Very happy to see that. So, I mean, this hypothetically should correlate. This should correspond to some bullishness in GameStop that has, it may not be a one-to-one, but that has generally been the correlation in the past. When we see big bullishness in SPY, this does permit GameStop to have a little bit more of a free hand in moving to the upside, given the risk of entering into, say, interventive short positions on the stock. But that's not exactly what we got. I know kind of yesterday I didn't think we were, I mean, right, we didn't get super deep of a push down. We did get a pretty violent push down off the open there. So I know yesterday I wasn't sure about that. I was like, man, I don't know. Given these conditions, I don't think anything too deep is really gonna go that well. We did get the push down, but then that lasted a few hours, and then whoop, we went right back up and back over 28. So little perplexing exactly what is driving this continued resistance at this 28 position. Yes, we have a lot of call gamma there. Yes, we have a big OI position there. But what is really going on at that 28 position? And see, it's not even 28 exactly, right? So pre-market, I'll point this out, right? If we take a look, we hit 28.30 again in the pre-market. That price level, that 28.30 area, is very, very close, and it has served now 3 times over the past few weeks as a resistance point, and that happens to line up with our closing price on March 27th. So if we go down, we'll come back here for a bit. Well, actually, I'll point this out, right? One thing that did cause a little bit of this depression was somebody entered into a big long call position for June OPEX, $20 calls, like 4,000 contracts. These appreciated a little bit, like 2 to 3%. I mean, it opened, they were a little higher yesterday, but that's not when they were sold. And then yesterday, all of them off the board. So very perplexing exactly what was going on there. That did cause about 350,000 shares of hedging on Friday. And then that caused about 350,000 shares to be sold basically toward the open yesterday. So interesting, that could have been a way to, I mean, it would have forced that hedging on Friday, and then it was a very large order to then go ahead and just kind of walk away with 2 to 3%. Maybe this person in fact saw some downside risk or saw what was coming later in the day, but definitely pulled the plug on this and caused the market maker to dump, to just dump 350,000 shares approximately. Yeah, didn't really have, didn't have a lasting effect. It, was responsible, I think, for some of the hedging that brought us down here. But back to this problem with 28.30. If we bump down to our technicals here, where's our daily charts? Is our daily? That's weekly. Oh, I forgot to post a daily chart. That's okay. I'll have to edit that. We'll head over to Trading View. Yeah. So like, this is what's weird to me is we're so sticky right here, right? So if we look, we've got the closing price, right? It's 28.36 on March 20. I guess 26th, not 27th. I think I said 27th. 26th. So this was the day after earnings. So earnings were announced. And then at the close, right after the close, we got the convertible bond announced. So massive. I mean, this is, I think Ultimator recently posted about this. That day, that following day. So from that close into that next day on the 27th, that was the day of the single highest short volume in GameStop history. Never a single day, right? So split adjusted, the highest short volume day in GameStop history. I do not know necessarily this is something of an open question. Why this closing price the day before, except that a massive amount of shorts essentially entered here and down, right? Entered here, whether or not they got a convertible bond or not, it seems to me that shorts entered instantly. They instantly adjusted the price down. I mean, we shot down upon the announcement by like $2, down to like 26 something. So there may be shorts who didn't end up, like people who shorted the stock off of earnings, maybe even to accommodate, right, because a part of this lined up with a particularly large set of swaps. So Friday and Monday, there were two very large swap positions that were either expiring or needed to be rolled. Maybe what's keeping the price down here is the fact that there are institutions who expected to get convertible bonds but entered into short positions. While the price remains under this, they're okay. But if they didn't get convertible bonds, that might explain why they might not want the price to go up here, because the short positions go underwater back here. So all of these shorts are here holding on to these shares, waiting perhaps for Ryan Cohen to enter into another convertible bond offering so that then they can hedge their positions, something like that, right? Because the idea with this convertible bond trade is that these convertible bonds, so I talked about this a bit, I posted this over on my Twitter page early this morning. Convertible bond pricing here, these are working very similar to call options. Okay, so as we can see, right, to a certain extent, these are appreciating based on the price of the underlying. But they are also appreciating with respect to implied volatility. So what most convertible bond arbitrageurs are doing now is they have shorted the stock. So they're short the underlying stock. They're long these bonds, which work like stock. So each bond converts to about $33.5 shares. So the delta on them around this price is around 0.9. It's pretty close to 0.9. So for every bond worth 33.5 shares in the future, they are short 29-ish shares of stock. And so what that means is they're largely hedged to the change in delta of these contracts. So originally I thought that these were potentially a gamma trade, but they seem to be hedged with respect to delta related changes of delta. I mean, maybe they're not hedged with respect to the rate of change of delta purely, but what really seems to be affecting the in a profound way the valuation of these bonds, the premium on these bonds is implied volatility. So, for example, if we zoom in a bit here, you should be able to see. If we look back, here, so the last time we were even at a higher price over on like May 1st. So where's May 1st? May 1st is right. No, April 30th. Sorry, not May 1st. April 30th is right here. April 30th is right here. So we can see, right, April 30th, the price opened that day at around, right, GameStop underlying opened pretty high. We got up to, that's weird. It says Thursday, May 1st. In any case, no, it should be May 1st, 2035. Was there just none traded on the? I guess none were traded on the 1st. That's very interesting on that Thursday. That's weird. But in any case, okay, so none were traded, but we didn't get higher. Let's say on the 30th, we didn't get higher than 118.8% on face value there. So on April 30th. On May 1st on the stock, though, right, we had gotten up to $28.35, so higher than we've gotten recently. If we fast forward here, right, yesterday's high with only closing at about 28%, right, the closing price on the bonds was 120.29%. So that's 2% higher, even at a lower price in the underlying. So what's the difference there? If we hop over to, let's see, we take a look at our IV, for example, we can see that our implied volatility is much higher. So we look at our composite IV, right? We can see right now IV is at about 104%. Back here on May 1st, ooh, pretty close to our lows. I think we are in the like upper 80s, so around 87.5% composite. So that's about not quite a 20% increase in implied volatility. That's adding 2% to the face value of those bonds. Now, what's very interesting about these bonds, right? The volume on these bonds, these are being traded in like chunks of a million. So these are very high. If we bump over to daily volume, yesterday's daily volume on these guys was pretty close to 10 million, if you can see there. So yesterday's daily volume was around 10 million. 2% on throwing around a million of these guys is pretty, right? So they're each 1,000, right? So that's like billions and billions of dollars worth of these bonds are going back and forth somehow in the course of a day. So these are massively levered. Like I somehow wonder if there's like derivative positions, like secondary derivative positions on these bonds that allows this to happen, because the volume at which these bonds are supposedly being exchanged is crazy. So if you're flipping this for like 4 or 5% face value in a couple days, but you're shooting millions of these back and forth, like you're looking at, these are profit margins on these trades of, absolute value of taking away like 40 or 50 million, right? You trade a million bonds, and the bond price is up 3 or 4% from where you picked it up, 3 or 4 percentage points, I should say, versus face value. That's $1 billion worth, notional value in the bonds. You're picking up 3-4% on that. Yeah, that's 30 or 40 $1 million. Okay, that's quite the trade. Exactly how that's occurring, exactly how someone has, they must just be going back and forth like super quickly. Must be something like that. So in any case, I don't really know what's going on there. This stuff's a little in the dark to me, but it does demonstrate that implied volatility is really important when assessing the price on these bonds, and that whoever is trading these bonds really cares about these IV levels. And in fact, we're getting pretty close to what we were back when these bonds were issued. So yeah, so these are happy. The arb traders are happy when we're doing that. Whoever holds the bonds wants to have IV up. But exactly right. So that doesn't quite make sense to me as far as if you've got these, right, you want GameStop's price up because that means GameStop IV is going up. That means bonds are going up. Yeah, very, very interesting to just continue to monitor that situation and see what's going on there. But in any case, I suspect there's some sort of short party potentially that entered back during our earnings when the convertible bonds were possibly announced. And I don't know, they've got this open short position, but they're not necessarily hedged on it with those convertible bonds. That's a possibility. In any case, yeah, we see like June OPEX IV is really high. So approaching 100%. That's our highest one. Even this week, that's not very common. Later May IV is kind of down again, coming off of May OPEX, but yeah, June pushing 100% right there. Very interesting. So continuing to see, this kind of stable, mostly bullish structure, right? We're back on top of, just like we're back on top of all of our moving averages here. We've only ever spent a couple weeks in this place, right? Not very long, over the past couple, essentially over the past year. So what's going to happen now? There's really no guidance except to move to the upside. Not exactly sure where that's going to go. Momentum still looks like it's on our side. Still looks like we have this kind of cash floor in the mid 25s. So does a serious correction at this point make sense? Could happen. Not necessarily going to go much below. I'd be surprised to see it go below 25 something. Options wise, some interesting migration of bullish bets up here above 30. Interesting, very, very late large, like a decent sized block of $34 calls, all at the ask, were traded like in the closing minutes of trading yesterday. So there are some bullish options folks out there. We did get a pretty decent size put position come in at 27.50 at the ask, so over 3,000 contracts. Some puts at the bid, about 1,700 at 27. This has had the effect of raising up our max pain to 26.50, which you don't hate to see. But by and large, if we look at our gamma structure, not really changed very much from what we were talking about yesterday. What this looks like to me, it looks like we've got a nice bracketing here. We've got mostly a long call position here at 28. We've got mostly a long call position at 30. We've got gamma in the midst. We've got a hedging dead zone at 29.50. It seriously looks like, with all this bullishness in the broader market, with these big bullish bets we saw likely major institutions make last week, these synthetic long stock positions, it looks like we get knocked up and then kind of trade in this zone right between these two gamma buns on this delicious price action patty. So could we move back to the downside again? Yeah, I mean, it depends how dedicated whoever this is that does not want the stock trading between trading above 28.30. I don't really know what's going on there. That's a bit perplexing. Seems like somebody doesn't want that. And if that person with that institution, whoever is doing that, continues to do that by whatever means necessary, well, I guess, maybe traders eventually do kind of acquiesce and let some things kind of drift down, retest again like we retested last week. But, purely from this options perspective, I have a hard time not seeing us move into this little bounce house, right? This little bounce house, if we're quoting, Richard's term. Yeah, this little bounce house between 28 and 30. Juice up those IV premiums at this area above 30. Ultimately, if you're the options market maker, make sure the stock closes below 30, maybe even 28 by week's end, at 27.99 close or something like that. You rake in a ton of money from all these sold calls with very high IV premiums on them, like we see now. So, reiterating that, still looking good in terms of broader market situation. We'll have to see, right? Still not sure what's going on there with that 28.30 level. We'll have to see what happens and how that level behaves intraday. Today, whether whoever has that particular interest is going to engage in that or not, or whether we're going to go ahead and occupy that that options gamma hamburger wedge, whatever you want to call it there, that little bounce house. So we'll have to see. That's what's on the docket for today. Looking forward to seeing you guys, obviously, hearing questions from you guys, hearing comments, and seeing you guys out there in the hunt. So we'll see you guys. We'll see you guys tomorrow. Looking forward to another one of these breakdowns, and good luck out there with your trades. And let's go GME. So we'll see you later.